Welcome back guys to the channel. So we are back with another video, and this is going to be about trading the engulfing candle in together with the moving average. The engulfing candle using the moving average as your indicator. So today we are going to use GBP, Euro GBP, the 1 hour chart as our example, and we are going to look for such examples and try to see which opportunities can be presented with an approach or strategy. So without wasting any time, let's jump right into it, guys. So for example, first thing, before you try to look for a signal or a confirmation, first thing you have to first understand where is the trend looking. So first thing, go to the 1-day chart and try to understand where is the market going. So you want to have some kind of a bias of the market, or you have to be within the move of the market. You're trying to see if the market is going up or it's going down. The market sentiment is key. So for example, you can see here the market was moving up. You can see it's coming down in a sort of a range. You can see here it's going back again. Here it's going down. First thing, the 1-day chart will always try to give you the market sentiment. It's in a range right here. It's in a trend right here. It's in a range again right here. So first thing, market sentiment, up, down, or a range. Euro GBP is mostly always in a range because these currencies are both strong. So we'll come back to the 4 hour to try and see in the close days or in the last couple of days, where is the market heading. Trend here also. So you try to come to the smaller time frames to see how the market looks like on the previous days and weeks. Okay, now right here, as you can see here, we are in a downward trend, as you can see it right there, and this was an upward trend, as you can see right there. So for example, this trend changed direction somewhere around here, came back, retested, and as you can see, the moving average coupled with the engulfing candle presented such a very good opportunity that could give you at least a good 1 to 2 risk to reward in the short position. For example, this could give you a very good 1 to 2.5 as a risk to reward. So how do you get this opportunity to open a position at this exact point? For example, let's say this was the previous support, that the last support that pushed the price to this point, and then double top was confirmed, broken, retested, the price made an impulse move and broke the support right here. So after the break of this support, market retested with a big engulfing candle, came back again the second time and retested in the same supply zone. So here it was a good opportunity to enter such a trade and to try to capitalize on such an opportunity. The moving average with a engulfing candle in a retest of the break of this support. What are we looking at here? The moving average together with the engulfing candle in a downward trend. So I had spotted another example right here, which was for example, we had our resistances here, and then it was that this resistance was broken to the upward side, which means we are going to start looking for entries to the upward side also. Now we have 2 entries right there. We have an engulfing here and another engulfing here, and these 2 were all good entries to the upward side. How do we go about this? First of all, make sure the trend is confirmed. Let the resistance be broken and let the market come back to a retest level and wait and see if this level is confirmed. Otherwise, sometimes the market will fake a breakout and it comes back in the range or back into the zone down here. So here there are some two opportunities to enter and open a buy position. So here could long and here could long another position, and as you can see there were a lot of impulse move to the upward side that were pretty good. Now these two match exactly our strategy of trading the engulfing candle with in conjunction with the 21-day moving average if you are in a trend. This will be different when you are in a range, but this video is specifically when you are trading in a trend. So we had spotted some other examples before we here we have another example is right here. After this long downward trend, it was a very strong downward trend, and we saw a range forming for close to something like a week before it broke and retested above all the zones. Now if you look properly, this zone was retested right here, and this retest provided a very good engulfing strong candle that was a very good signal to enter a buy position, and you can see the return was amazing. And again the following day within the same entry you saw another impulse move again, so there were really good returns on this one, and it's exactly in our strategy. We are using a 21-day moving average with engulfing candles as our signal in a trend. So these were all good entries and good examples. So in the future, when you're trying to look for an opportunity to open a position, first confirm that whatever you're trying to trade is in a trend. Then look for the 21-day moving average, because this is the one we are using right here, and try to look for where there is an engulfing candle coupled with some kind of confirmation of a key level using 21 moving average as your indicator. So that was the video, simply explaining how to use the engulfing candle together with the moving average. So thanks for watching guys, and keep it up.